Hello, everyone. Welcome to How to Trade. I'm Shane Vernier, and this is the Wednesday workshop. Today, we're going to talk about the 920 EMA Crossover strategy. I'm going to illustrate exactly how to trade it. I'm going to give you the trading rules, and then we're going to run through some examples and see if we can make a little bit of money on this live stream. Now, before we get started, I want to encourage everybody to ask questions. I will get to your questions as soon as I can. I know this is sort of like a workshop, like a webinar type of a format, so feel free to ask questions. It's all about learning. It's all about trying to find a strategy that will work for you. Maybe it's the 920 EMA, maybe it isn't the 920 EMA. And then towards the end of the live stream and towards the end of the webinar, I'll go through and give you some of my market reads and a few live trade updates. We had really a banger on gold yesterday, so I really want to point that out. And we've got trades in play for Netflix on the 920, and then also this gold futures trade just came across the board on the 5-minute chart. And I want to sort of show you. I want to start off by showing you a live trade that's going. Now remember, these are demo dollars. Now my sizing, my position size isn't too big, isn't too small. In this trade that I'm going to show you right now is very, very doable for those of you that are trading on intraday prop trading. If you're trading for a prop firm and you have enough leverage to put on, say, 4 contracts of a gold futures, you can make this trade. So even though these dollar totals look huge and they look like pie in the sky, like, oh, Shane, you know, that's not possible. It 100% is possible, and it's very, very doable, even given just a modest, say, a $50,000 prop firm assessment that you passed. So this is the trade that I'm talking about right here. This is a 5-minute gold futures chart. I'm going to go ahead and close down my trading dome. The trade was already executed. I did this before we came on live today, and it's using the 920 EMA crossover. The 9 crossed over the 20 right here, and we have sort of our gold bar. I'm going to talk about how you can get that and take a look at some of these coding tricks that we have for you on TradingView. I'm going to cover that here in just a second, but the buy was very evident. It was right there at the end of your gold bar, and now you're rallying in with just 4 contracts. Just 4 contracts, you're up about 3,100 here. The biggest thing you've got to understand is where to put your stop losses and where to put your profit targets. The one thing that we cannot do with any sort of trading strategy, I don't care if it's the orb, I don't care if it's a crossover, I don't care if it's Fibonacci's, we have a real problem trying to figure out how far a market will go. That's the number one trick, measuring follow through. It borderlines on the impossible. All we can really do is figure out where our stop losses are and what exactly we need to get out of a trade. So that's absolutely a fantastic trade right there. That one's off and rolling. I don't know where it's going to go, and we're just going to let this thing twist in the wind. We may win, we may lose, but we are long. And it's a 5-minute gold futures chart. Really does it doesn't necessarily mirror the exact pricing of the spot gold chart most of you trade, but this is what I trade. I trade gold futures just because it's a very, very liquid market and it's an active market. There's a lot of money trading gold right now, and if you're doing well in the gold markets, congratulations. So I want to welcome everybody to the workshop. I want to show you exactly what we're going to be doing. We're going to be trading these live. That trade's executed. We're going to let it go. We're also going to be looking at the Euro USD on a very short time frame. We're also going to look at the NASDAQ futures, NQ futures on a very short time frame using the 920 EMA. And then we're also going to introduce a tool, an RSI confirmation tool that could make your short-term trading using the 920 scalping can take it to the next level. So that's what we're going to be doing today. So I want to welcome everybody. I'm always glad that you guys dropped by and want to talk a little bit of trading. Really got a full house. There are a lot of folks watching, so fantastic. Good to see you. Welcome, Adzoni. Welcome, Saffron. Welcome, yes, sir. Billionaires. Good to see you, billionaires. Bobby Bob, always a pleasure. Bobby and Lita, thank you for joining today. Okay, let's go ahead and get to it. Now, one of the great things about strategies is you don't have to pick just one, or you can pick one, but just remember, when you want to trade any strategy that we cover here on the YouTube channel, you definitely want to head on over to Switch Markets. If you're an international client, if you're in the United States, then reach out to me via PM, and I'll give you a different broker. Maybe you could take a look at. We recommend Owanda, but we've also have several other. IG, I believe, is another one that we recommend here. So, but if you are an international client, we recommend Switch Markets. Lots of bonuses. You can see right there, 1,725 markets. If you can't find something to trade there, you're not trying very hard. So definitely check out Switch if in fact you are ready to trade just on demo or on a live account. Dave, good to see you, Dave. Let's see a Bobby Bob position on the Great Britain Pound USD 4-hour 920 crossover. It's a great time frame, Bobby. We're going to talk about that in just a second. We're going to do some scalping, but we're also going to talk about a couple of time frames that you can do very well on. So this is the 920 EMA workshop. Remember, all of this sort of is derived from our YouTube channel. We do workshops on all of our strategies. This is sort of Strategy Central, the How to Trade Calm YouTube channel. Not very many subscribers. We've got quite a few videos out. We've got the last 2 videos. Pretty much nobody's watching. I don't know know why. Maybe YouTube's not featuring them, but check those out if you're interested in just pure price action, trade the break price action right there. And then also your intraday trend line reversal trading strategy. That's one that we dropped yesterday, and the trend lines are pretty good. The Forex orb was a very popular, just an absolutely very popular strategy that a lot of folks like, and we do everything from coding some of these strategies. And this one right here is probably one that we're going to highlight here in just a second. 5, 8, 13, we do those workshops as well, and they're all pretty good stuff. So if you're interested in picking a strategy, we recommend our YouTube channel. It can get you up and running relatively quick. Okay, 920 EMA crossover. The big thing that we have to remember with the 920 is that it is simple. It is simple. Don't make it hard. Laos Gaming, good to see you, Laos. Don't make it hard. It's easy. These are the rules. Very simple. A buy is when the 9 crosses over the 20 EMA. That's it. Crosses over, we're looking to buy. A sell is when the 9 crosses under the 20. We're looking to sell the market. You can execute this on any time frame. Just understand, the smaller the time frame you use, the more likely you are to get chopped out. All right. Now, it's not necessarily that you can't trade small time frames. It's just to understand that your risk needs to be less, and you don't need to be, I would say, as pot committed. You don't want to throw all your money down on, say, a 1-minute trade, because those 1-minute crossovers, you're going to take a lot of those trades. Now, your stop loss is going to be above or below the previous swing high or swing low. I'm going to show you exactly how to do that in a second. And your profit target is going to be either a fixed risk versus reward, or it's going to be based on market structure. Now, a lot of folks love smart money concepts, and market structure is a big part of that. We're talking about swing highs and swing lows, bearish market structure, bullish market structure. We're going to sort of reverse engineer that gold trade that we have running right now, and I'm going to show you exactly why I put everything the way that I did, and where exactly you can execute these trades in the future with a little bit of, not specificity necessarily, but precision. We want to be as precise as we possibly can. That's what we want to be. Now, what we're going to be referencing here, the charting format that I'm going to use is one that we put out to you using AI to code the 920 EMA crossover strategy. We go through, we show you how to use ChatGPT to actually build TradingView code, and the code itself is going to give us 3 indicators that I think make this 920 EMA an absolute breeze. They make it an absolute breeze. So we're going to go ahead and look at that, and what those indicators do is they're very simple. When we get a crossover, you're going to see a gold bar, a gold price bar. That's going to be a buy signal. When you get a cross under, you're going to have a sell signal. That's going to be a purple price bar. And you'll notice that it's very important to always remember where the shade is. The area between the 9 and the 20 is shaded. Now, this code's available on that coding strategy video, so go ahead and check that one out if you're interested in getting that code and running it on your charts. If not, head on over to How to Trade. Send me a private message, and I'll see about getting you the code if, in fact, you can't find it. But it's pretty good. It makes this strategy very, very simple. Now, at the bottom of the screen is the RSI. We're going to integrate that in just a second. Remember, no strategy is foolproof. No strategy is foolproof. I don't care how great somebody says that their approach to the market is. I mean, I'll be honest with you. I use Fibonacci's and fractal geometry to trade. I am borderline arrogant with my market calls. I'm a nice guy. I'm a happy guy. I want everybody in here to win, and I don't care how you do it. But when I throw down a level, I'm confident in that level, to the point where I'm borderline cocky. Most of you as traders, if you're going to be successful, you will need to get to that level of confidence. And that just takes time and experience. Maybe the 920 is something you need to do. But no matter how confident I am in a level or a trade, I know that there's always a chance that I'm going to lose. Now, with the EMA crossover strategies, there are a few times that you have to be very, very certain that you're not trading the 920 EMA. This is a YouTube video on our channel. Check it out. 3 times to not trade the EMA crossover strategies. You're guaranteed to almost get chopped up every time. Check that video out. It'll tell you exactly when not to trade it. Right now, today is not one of those times. It's time to trade this thing. So, all right, let's go ahead and run through our rules and show you exactly why this trade's built the way that it is, and then let's go go in on the prowl for some real life opportunities. Let me see. We got a comment from Madzoni. Madzoni, I shorted the EU about an hour ago, ranged with entry on a 30-minute chart, and now is moving south. How can I catch distribution on entry? Yeah, we'll go ahead and we're going to cover the Euro USD here in just a second. I've got a real short time frame chart up, and we're going to execute some trades on that. So stay tuned. We'll get to the Euro USD. This is a good look at our gold chart. Now, my stop loss is where I want everybody to start at. Now, you don't even need the code to make this strategy work for you. All you need to do is understand when we cross over, you're going to go ahead and just look to buy that market on the crossover. That's it. That's the 920 in a nutshell. So if we do get this set up, where does my stop loss need to be? I highly recommend doing this, going beneath the previous swing low on a buy. That swing low right there, this is a 5-minute chart. It gives you a little bit of room to work. You dial in your leverage accordingly. Now, I've been sort of really much maligned on YouTube. I've had a lot of people say, hey, Shane, you don't know what you're talking about with risk management. I'm a big believer in the 1 to 3% rule. I think on intraday trades, you trade anywhere from 1% of your account to 3% of your account. Now, I am more aggressive, and I understand that we need to make some money at some point. I'm willing to recognize or I'm willing to allow the traders to go up to 5% of their account. No one else around will do that. They'll say, that's crazy, that's risky. It is, but even at 5% of your account, all right, you have to take 4 losses in a row to go down 20%. Now, if you're risking 5%, and let's say you've got a 1 to 2, maybe a 1 to 2 risk versus reward, that's a healthy payoff. Or if you're basing this trade on market structure, you don't need to win very many of these trades to make money in the long run. So I'm confident that even at 5%, you probably are going to be okay unless you just go on the worst losing streak ever where you're losing 8 or 10 in a row. Now, if that's the case, you need to really adjust your time frame in your thinking about what you're doing. 1 to 3% is very safe. If you want to be aggressive, you can go 5%. A full disclosure, I've gone 5 and 10% in the past. I will tell you that it takes the pressure and the stress to another level. 1 to 3% safe. Look at what's happening to our trade right here. We were way up. Now we're coming back down to break even and may actually lose this trade. It's not a good scenario, is it? Well, let's read on. So right here, that's going to be where our stop loss is, right beneath that previous swing low. Now, a lot of folks are going to say, listen, I want to put this right beneath my signal bar and play really tight. You can do stuff like that. I would recommend if you're going to put your stop loss there, definitely pad it a few pips. But you're going to want to put your stop loss there on longer time frames, like a 4-hour chart, which is what Bobby Bob was recommending there, using on a Forex pair. I wouldn't really have a problem with that underneath the 4-hour chart. We're going to get to that stuff here in a second. But on a 5-minute chart, you can see exactly what happened. More times than not, you see this type of price action right after your signal. Bang, you get triggered, you're long, and then it goes against you and stops you out real tight, and then you get the big move. Remember, we're trying to catch big moves here. Now, with our fixed risk versus reward, I recommend a minimum of a 1-to-1. A lot of folks laugh at that, saying you can't really be profitable. Well, if we were in a 1-to-1 risk versus reward, we already took the money out, and we're on to our next trade, and we don't have any more of this drama. Now, if you're going to get in on big moves and make a lot of money, trying to make a lot of money on one trade, you're going to be looking at 1-to-2s, 1-to-3s, or you're going to be looking at market structure. Now, in my opinion, if in fact you wanted to take this trade and base it on market structure somewhere up in here, somewhere up at the top of this bearish sell-off, you can certainly do that. But just look at what you're doing. You're looking at buying 303s and waiting for price to get up to 33.41. So you're looking for about a $38 move in price. Can it be done? Of course it can be done. In this market condition, can it be done? Especially now it's possible. But there's no rule saying, hey, we can't go to 320, 319, and then just turn around and sell off $17, and now this trade's blowing up in our face. So as a trader, you have to understand how you like to trade, how your psychology works with this strategy. Bottom line, I'm a conservative guy with my profit targets. I'm a 1-to-1 trader. I could tell you right there, what were we risking? About $16 on this trade. So 16, boom, I would be looking right up there at 19. I'd be gone. I'd have already taken the money and moved on to the next trade. Is that profitable long term? It is if you're savvy enough using this strategy. Yeah. If you know when to trade it and how to trade it, yeah. 1-to-1 ratio, all you got to do is hit above 50% and you're profitable. Now, the beauty of taking larger profit targets and why most people in the financial and the trading sector tell you to do that is if, in fact, you do hit the home run. And for those of you that don't know what a home run is, we're talking about American baseball, and it's the biggest hit you could get, and you score a bunch of runs. If you hit the big home run and you get the big profitable trades, the 4Xs, the 5Xs, you don't have to hit them very often. The problem is your consecutive losers can really add up, especially if you're trying to do this in flat markets. Take a look at what we had earlier today on a sell-off. Look at this one right here. Right there was our purple bar, our sell-off during that pre-US Open. Boom. That's a huge move. Your stop loss would have been right up there, right above that swing low on this 5-minute chart. Sell off, pull back, you took some pain, and then you get in on a big, big move that really took you to the promised land. I mean, you went from 330 down to 270. That would have been your home run. This trade right now it's eating against us. Now we're in big trouble. We didn't get the follow through we were looking for at the top of market structure, and now we're just going along for the ride. And right now we're watching U.S. equities sort of rebound off of the mid-session sell-off. We're in big trouble here. What do you recommend? That it's our stop loss, we're out, because that means that this trend right here, this early session trend is going to continue. So that's the 920. Dave Zappel, good to see you. Dave, let me see a Kara, 915 versus 920. I like the 920 EMA. 5813 is another one of my favorites. And you can see right here, we're going to get stopped out of this trade. It looks like any minute. We're going to go ahead and go on to some other markets and watch those. But you can see right here how fickle this can be. You really need to get that initial big push in that move, and we got a good push, just not enough. Okay, let's take it another one. This is a stock trade. This is a stock trade that we talked about last week, actually. We talked about it on the switchmarkets.com newsletter. If you're not a member of that newsletter, hit up Switch Markets, get on their mailing list, and they'll get the newsletter out to you, and it's a video with me sort of giving the weekly preview and the things that we need to watch. Netflix was one of those things. Now, the 920 for this stock buy was really fantastic. Right there was your gold. Right there was your gold. That was your buy. Bam, there's your big buy. So we were buying in right around the 978 and got a big-time rally. This is a daily chart trade, though. Stocks, looking to maybe play that daily chart and get a swing trade in or maybe an intermediate-term investment. That's a beautiful thing. We bought in right there. We're already up around 1,051. It looks like we're going to break above this topside resistance established in February. We're going to break high. So that was another one that we had. It was a pretty good trade. You can see we had a few disappointments here. That was a pretty good move back on that signal there. This one was just an abject loser, but we got stopped out right there, so it wasn't the end of the world. And then right there, bang, bang. Looks like we got in on a pretty good runner there for Netflix. Let me see, soft one. How about the 1020 EMA? I'm not a fan of the 1020. I focus on the 920. I think the 920 is a pretty good one. But listen, mess around with the periodicity any way that you like. I mean, the 13-period EMA is my favorite. So, and it's not a part of the 920, but I would be sort of, I do some back testing. Maybe the 1020 works better for you. For me, the 920, the 1020, it's real close. I probably would just go with the 920. Something to think about there. All right, let's do a little bit of high-impact scalping here. Okay, this is a 5-minute chart, WTI crude oil futures. You can see what we have going here is just a real flat market. It's going to be very, very difficult here to get a trade. Why? Well, because you can see right there, we flattened out our ranges. Our 5-minute ranges are very, very small. Right there, we got a great trade a little bit earlier today. Boom. Nice big sell-off bang. I mean, you made a lot of money on that, and that was pretty much just a clean break going into right above that EIA inventories report. Pretty good stuff. So let's go down to a lower time frame. Let's see if we can actually just get a trade executed. Okay, a 1-minute chart. So now, one of the things about traders in general, and most of you out there, you want to trade low time frames. You want to trade real tight, low time frames. And we're going to do some work on the 15-second chart here in a minute in the NASDAQ. It's something we've done over the past few months and had some success doing it. Very hard to do. I don't recommend it. If you're going to trade these very, very short, compressed time frames, 1 minute, 5 minutes, maybe even 30 minutes, what you can do to boost the efficacy of this strategy is add the relative strength index. Now, the RSI is an old technical tool. It was built by Wells Wilder Jr. back in the old days. The RSI has been around forever. It's as old as the hills. What it is a very simple way for us to figure out if a market is overbought or oversold. Now, remember, the crux of any type of a market is to try to find an area where buyers and sellers are matched. That's called equilibrium. Now, that level of equilibrium is going to suggest that the price has entered a level of fair value. That means that buyers are happy and sellers are happy. Price isn't really moving. What the RSI does, the relative strength index, is it shows us when price is in a relative state of disequilibrium. Now, what that means is when we're above 70 on our RSI, we're overbought, we're looking to sell the market. When we're below 30 on the RSI, we're oversold and we're looking to buy the market. That's about as easy as we can have the overbought and oversold discussion. The RSI, relative strength index, I use a periodicity of 14, and that's based on the bar close. That's the factory settings of the RSI, Wells Wilder Jr. If you need some more information on that, check out Forex Signals TV. We've made a few videos on that over the past several years that could be a lot of help to you. So if I'm looking at a 1-minute chart, is it enough to just get a crossover? Well, maybe, maybe not. I mean, this crossover right here, you made quite a bit of money on that. Right here, you crossed under. Okay, you're still short there. You're feeling pretty good about it. But the market's really leveled out. You can see right here, your RSI is sort of gravitating right around 50. We're in a level of equilibrium. We're in an area of equilibrium. I don't have a reason to buy and I don't have a reason to sell. I want to wait until price gets out of that equilibrium state so I have an opportunity to get in on the retracement or maybe pick a direction on the upcoming price action. So right now we have nothing here on this chart. There's nothing really to trade. If, in fact, I was interested in doing something here, I would have to wait, and it looks like we may sell off beneath that 30, and that could potentially give us a buy. Now, when would we buy? We would buy when that 9 crosses back over the 20. It's that simple. On the shorter time frames, the RSI can really help you. It can help you stay out of choppy markets. I recommend doing that, especially on something like a 1 minute. Okay, we got a question about the Euro USD. This is a good look at a 15-minute chart. You'll have to excuse me there. I have a bit of a cold. My throat's a little raspy today. Excuse me. Pardon me. All right. 15-minute chart, pretty good for the Euro USD, especially if you're trading it during that London-New York overlap. You can see you've got really just a dynamite signal right here. Overbought territory, just barely, bang, there's your sell, and you caught just a huge move. You caught an absolutely huge move. Congratulations if you got that. Now, right now, how can we trade it? We don't really have anything. We were oversold right here. Now, that oversold would still be valid right now, even though we're X amount of bars in the future. Now, granted, I would love to see the market just go oversold and then bounce right back up in short order within 3 or 4 bars, but a lot of times that doesn't happen. You're going to have to just sort of base your decisions on some of these where the market maybe was oversold a little while ago, maybe, 10 bars, something like that. Remember, that oversold area, that spike low right there, we don't have a buy signal yet. But if we did have a buy signal, that RSI coupled with this swing low is going to give us our stop out location for the buy. That's why we really lean on something like RSI here. All right, let's see if we get a trade going. We're going to do some high impact scalping here in just a second on the NASDAQ. I'm sure we'll find something on equity futures here relatively shortly. Right here, 1 minute chart, Euro USD. Okay, this is a good example. You really are in a stiff downtrend here on the 1 minute. We're deep into oversold territory. Right down in this area, we're still in oversold territory beneath 30. All we need is the crossover. All we need is the 9 to cross over the 20, and then we'll go ahead and look to go long on that. That's where we're at there. Let's take a look at a longer time frame, one that I highly recommend for Forex pairs. 4-hour chart. This is a beautiful trade. This is more along the lines of a swing trade. Overbought territory, deep into overbought territory. Price action comes down. Right there's your sell signal. Your sell would have been right there at 113.87, and you're trending down. That's a fantastic trade. The trend has definitely shifted down. You can see the 4-hour chart is an absolute monster. It can be an absolute monster for swing traders, especially on a 4-hour time frame using the 920 for Forex pairs. It's fantastic. However, if in fact you would like to go to shorter time frames, you've just got to wait. You got to wait for the setup to be there. In my view, we were oversold right here. We're still sort of down in that area. I think we're going to get an opportunity potentially to buy this coming up here in the next probably 20 minutes after we're done. Let's go ahead and see if we can find a trade. But definitely Euro USD is coming off big. All right, E-mini NASDAQ. Here's a good one. You're in oversold territory, or excuse me, overbought territory. You can see right up here, this spike high really shows us exactly how far the market was out of disequilibrium. We want to sell. This is a 30-minute chart. 30-minute chart's going to be a little bit longer time frame. I love the 30-minute during the U.S. session for the U.S. equities indices. Love it. If, in fact, you do get a crossover here in the next hour, I would probably be playing that, betting that the NASDAQ's going to come off in a big, big way because we are well off of intraday highs here in the U.S. stock equities. So I have no problem going short. Now, let's do some scalping. Let's see if we can have some fun here. All right, here's a minute, 1 minute. What do we got? We're right around overbought territory, so something like that, 69.36. It's not quite. I would be looking at potentially a sell here. This market has definitely been trending higher for the last, I don't know, 45 minutes or so. Pretty good stuff right there. Let's go ahead and take this down to a real high impact scalp. Let's go to a 15-second chart and see if we can get some action. Okay, what do we have? Right down here, we had a sell coming off of this. It looks like you're sort of still short. Going to be very difficult to get that trade, though. What could we be looking to do right now? If, in fact, we don't want to use RSI and I just want to make a trade, which is what we're probably going to do, let's turn the RSI off, and all we are waiting for is our crossover. And then we're going to build this trade in real time. So let's see. I've got one contract on. I'm going to go ahead and trade a 4-lot here in the NQ, the E-mini S&P 500. I know these contracts, these position sizes seem large. If you're trading a prop account, they are not. They're not very large. A four banger, a 4-banger is very, very doable. Just remember, if in fact you start finding yourself getting out of your risk comfort zone and getting up above 5% or 7%, you may want to go down to a mini contract, the micro E-minis, and then you can just take that, you can take your risk exposure down to almost nothing. You really can. You can take it down to just a few cents, not a few cents, but like a quarter a pip, or excuse me, a quarter a tick on this future. So right here, we're breaking high. I want a market order, and we got a buy signal right there. We got a buy order. What we're waiting for is our crossover. So what do we got right here? This is a 15-minute chart. I got to go to a 15-second chart. But this 15-minute chart could be pretty good right there. So let's go down to a 15-second chart. Excuse me. See if we can get something going. All right, of course, we missed it while I was talking. 15 seconds right there would have been your bid. That would have been your bid. So let's go ahead and turn our RSI back on. We were almost in overbought territory. Let's just wait a few seconds and see exactly what happens. Sell-off is on now. You already missed your initial rush. Your stop loss would have been probably right beneath this swing low. In this case, would have been right beneath your trigger bar. That would have been a nice haul. Not a bad one at all. Now what are we waiting for? All right, looks like we're going to be waiting for this cross under right now. So let's go ahead and turn our RSI off because we're nowhere near equilibrium. What we want to do is we want to make sure that we get in on an A trade. I want to execute A trade live for you here just to show you how it's done. So we're going to go ahead and turn off the RSI for the moment. Okay, right there. That's going to be, let's go, I want to go with my sell market order. But we've got to get our crossover first. And look, at old habits die hard. This market's really rotating. The bulls are in there. They're interested in maybe driving this thing higher. What we're waiting for is a cross under, theoretically. If we haven't really crossed, if we haven't crossed under, you could still potentially be long this position. Did you just get stopped out? Probably. That's why 15-second charts are highly problematic. It can be very, very difficult. Let's see. We're waiting for this thing to set up. I don't know that we're going to get it here. We're going to have to check a different market. Let's go ahead and check a different market. Let's go to the E-mini S&P 500 futures. 15-second chart. What do we got here? Well, you had the same basic formation. You had the buy right there. There was your buy signal. Bang, bang. All right. Didn't get stopped out here, so you're still long. Still doing fairly well. You want a market order here. What are we waiting for? Let's go into our RSI. What do we have? Still sort of within that envelope. We're not over 70, so we're right around equilibrium. We really want this thing to break way up and then maybe give us a cross under sell here coming relatively soon. We're just going to go ahead and take it. We're going to take it without the RSI because I want to execute one. Sell. We're looking to sell market because we're going to be going right on this bar close when, in fact, we get our purple bar as a signal. If we get it. Is it viable to trade a 15-second chart? It's hard. Imagine doing this all day long. Okay, there's our signal. Now we've got an opportunity potentially. If, in fact, that coded bar shows up purple, we're going to go ahead and pull the trigger on this at 5, 4, 3, 2, 1. All right, we're selling it. We're short. Do we get filled? Okay, there we're filled. Now, where's my stop loss going to be? All right, right there, you sort of had a head fake to the top side. You got a couple of options here. You could put it to the top. You could put your stop loss right there. I recommend putting it right up there above that swing high, but we're starting to get some favorable price action. So if we're up there, we sold 54.35s, and we're up there with a stop at 54.40. We're looking for a 30. If we could get a 30, that's a 1-to-1. If we could get a 25, that's a 1-to-2. So let's go ahead and shoot for a 25 here and see if we can get this move. We got a long ways to go still here. Can we get this move? Now, we're up about $1,000. We're rocking a 4 lot. If we, in fact, do get filled up right here, I want to make darn sure that I get out of the market and take my profits. Now, we're up pretty good, but do we get the follow through? Now, right here, this is where the rubber hits the road. This is where your success as a crossover trader is going to be determined. It takes a lot of guts to stay in this trade. Right now, I'm looking at my ticker and I'm going ding, 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 1,200, 950. Now it bounces up in our face. We just lost 500. It's going back up against us now. Now what do? Do we hold the course? Are we in trouble? What do we do? If you're trading a 15-second chart, you have got to stick to your guns. You've got to put your risk down. You've got to have your reward down, and you've got to your success is going to be a function of hitting those profit targets. That's all there is to it. Now, personally, this isn't my kind of trading. That 1-to-1, we got really a beautiful, beautiful washout of price action here. We got a great entry. We got a good signal. We had a really good opportunity there to make a great big trade. Now, the question becomes, if I rack my profits at 1-to-1, can I do it often enough to make myself a profitable trader? And the answer is you've got to hit over 50%. If you hit 52%, you're a winner. 55%, you're a winner. But with this 1-to-2, we're looking to make 10 points here, risking 5 points or 5.5 points, whatever. We're right in it. That means if we hit a 1-to-2 risk versus reward ratio, we've only got to be successful somewhere down around 30%, 35%. If you're trading a 15-second chart, you're going to be making dozens and dozens of trades a day, dozens of them. So that's something that you have to consider. You have to really think about, hey, are we going to be able to do this? Is this viable for me over the long run? Maybe this is a trade, trading 15-second charts. Maybe this is what you do an hour a day right after the U.S. Open. Your success will depend on your ability to hit your profit targets and locate your stop losses. The better you are locating your stops and working your profit targets, the more successful you're going to be with the 920. Now, this is tough for me. This is hard. This is hard to do. You're sitting in there. You're waiting to get the washout. I feel like we can get it. I feel like it's there. The market's sort of selling off a little bit, but this market's so chaotic that anything can happen on any given minute. I'm going to give that another minute or two to sit there and see if we can hit our profit target. But this is very, very tricky trading, and it's something that takes courage. It takes guts and understanding what a system is as opposed to what a perfect trade is. I like making trades. I don't necessarily like trading systems, but if you're a systems trader, something like the 920 could really help you out. I mean, it could get you going in the right direction. Let me see, ad 7, sorry. Hey, what up? Great work. I want to know on your opinion on the Aussie CAD sell. Yeah, I'm going to go ahead and I'm going to pull up my opinion starting pretty much right now. We're going to go through a few markets here, and then we're going to go ahead and sign off for the day. We'll be back tomorrow with just a market scan. But this was a pretty good look at the 920. Mubarak, hi, how are you doing? I hope you're doing well. All right, guys, we're up $1,000. What do we do? Take it? Wait. That's the discipline. Yeah, we're scalping. This is a 15-second chart. It doesn't get any more scalping than this. Let's go right here, 1150, 1200. Let's get that washout. Let's get that washout down to 25. Get us out. I mean, we're right on the doorstep. 3 3/4 points is nothing. It's absolutely nothing. Our profit target's got to be right down here, right down around 25. Go ahead and put that down there with a buy market. That's it. That's our profit target. Look at, we're closing in on it. Do we hit it? Are we going to get an opportunity here to hit it and close the trade out? This is really difficult. This is hard. There's nothing like the last 25% of a trade. This is truly difficult, and why a lot of people just are never going to make it in the markets. This right here takes discipline, and it takes having a big picture, really a big picture view. Okay, we hit our profit target. Bam, we got it. So right there, that was a pretty good one. Our gold trade, we forgot to stop out of that. We got hit there, but your account history right there, what did we make? Made what, 2,000 on that trade? That's pretty good. Wasn't too bad. The gold trade didn't work. The 5-minute trade didn't work to begin with, but this one right here went down and we got our stop loss or a profit target. So there you have it. Let me see. Eli just started trading on the 1 minute. Can't imagine on a seconds chart. Yeah, I mean, you look at all the trades in there. I mean, you're just making trades all day long, all day long. All right. That's scalping. That's the 920 EMA crossover. Okay. Let's run through a few trades that I do want to go through on my own personal view, and we're going to go ahead and get out of this coded 920 template and go ahead and do sort of what I like to do. Watching that dollar yen, we put that out as a trade idea yesterday. This was a real banger for us. This gold trade. Let's go down to a daily. We had really a fun time with this one. I had a lot of fun with this one. 35. We knew 3,500 was going to be a big time resistance zone. It did step up. If you sold 3,500s, fantastic work. I mean, honestly, fantastic work. That's one that I should have pointed out. And honestly, I thought we had more time, and we just didn't. The 3,500 sell was brilliant. If you sold 3,500s in the XAU USD, well done. Absolutely well done. Now, 38% right here is 32.97, excuse me. We had 33.01 buys in, and I really want to stress just how beautiful this trade was. Right there. Absolutely fantastic. Our low right there was right around 91, 32.91s, somewhere down in there. Just an absolutely fantastic trade. Bounced right up and really got us paid in short order. Let's go down to a 5-minute chart and see exactly what I mean. Boom, boom. Perfect. Right there. Got you a nice little $10 payoff. Relatively simple. Took a little bit of initial heat, but market didn't go that far. Really turned into just a fantastic trade. Now we've broken out of that area, and the question is where does gold go now? I'm buying it the whole way down. I'm not bearish. I'm still incredibly bullish on gold, but we're going to go ahead and buy it all the way down. So what I would be looking at right now, my next port of call is going to be my moving average. My 13-day EMA is going to be at 32.43, somewhere right in there. That's a fantastic zone. So maybe 32.45's fantastic area to bid right in there. And then the other one, 62% down there at 31.171. Probably looking at 172.50s. You know, if you want to be aggressive, you could buy 31 or 31.75s and get away with it. I think you're going to get significant bumps on each one of these levels because this market is incredibly bullish. Even though you've got two big negative days, it's incredibly bullish. So if I'm trading precious metals, I would still rather be long, but as far as just buying in willy-nilly, you're more than likely going to get chopped up doing that. That's going to be really, really, really tough, really tough. Let me see. Yeah, Eli, the golden zone, absolutely, right down in there. I think that's going to be your premium entry to the top side. But right now, I mean, I'm so bullish on gold. I mean, it's any reason to buy it. It really is any reason to buy it. So, you know, if you're looking at something like that right there, you got an EMA at 32.43, a 13-period EMA. That's my favorite, my own personal thing. And then 32.34. So that $10 area, it's going to be robust support. It's just tough to trade because it's so big of a zone. I'd be looking at the 32.45 buys and look for that swift, quick bounce back up to 32.50. Each one of these levels should have bidders. I'm not a big 50% bidder, though, so I'd probably pass on that. 62% right there at 31.71. That's going to be a banger back into the golden zone. I really like that one a lot. I think that's going to be a pretty good winner. Okay, we had one more question here on the, let's see. What do we have, Aussie CAD? I forgot already. Yeah, right there, Aussie CAD. I'm a big fan of the Aussie CAD. It's great. It's really a great pair. It's one of those that I like trading because it gives you some insulation from the U.S. dollar, but not really necessarily a tremendous amount because it's a commodity pair. You know, it's all about how is crude oil going for the Canadian dollar and how's gold going for the Aussie. So when you look at something like this, you're saying, okay, how would I trade this? Well, you got this big rally right here, boom, boom, and then you're very, very flat. That's not an accident. For about the last week, very, very flat, and that's because commodity prices are all over the board. So let's go to the weekly. Do you want to buy it or sell it? I don't really care. I'm neutral. Really a nice, beautiful 3-week range. Pulling back down to about 87.25. I would take that. About 70 pips off. Very nice. Absolutely very nice. So that would be my bid. That's what I would be looking at there. Let's see. Ultra Trader, we have a question. Absolutely very nice. So it depends on market structure. It depends on how big this range is. So what I like to do is I like to buy around quarter handles. So my entry zone on this trade, 38%, is right around 87.26. I'd probably be looking at 29s or 30s. Make sure I get that nice shade of maybe 4 to 8 pips. That way I know that I'm going to get in on the trade and I don't want to get left out just in case price goes right down to our zone but then rebounds. As far as how wide these zones are, that's going to depend on how big the range is. I have nothing to say about that. It's just a matter of where those swing lows and swing highs are. And we have the full Fibonacci Counterpunch series inside of the How to Trade trading room, and that's under the Elite Trading series. So check those videos out. I think there's 5 of them. I made them a few years back. Still pretty good, though. Show you a lot about what I like to do. Let me see, Ultra Trader. How to identify a daily bias? Relatively simple for me, Ultra. What I like to do is just pull a chart. Pull a daily chart, and I'd say, okay, what do I want to do? Well, the trend is up. Right there, boom, 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 boom. And then you got a real flat market. We're still very much in bullish territory. The reason why we are is because we're still above that weekly 38%. So if I'm looking at a daily bias in my chart, I have a nice wave like this, like a nice bottom here, a spike low and a spike high. If price is above 38%, I still believe the bullish trend is strong. If price is above the 62% level, I still believe the bullish trend is going to be in play, technically valid. So that would establish my bias for the day. So right now in the Aussie CAD, I'm bullish bias. Now the reason why, and you'd say, Shane, what about this big sell-off? And I'd say, well, it really wasn't much of a sell-off. You had compression. You had one big day where you crashed about 3 3/4%, but we've eaten all that up. Personally, if these sellers are still there, great. I want to see the price action based on this rally over the last 3 weeks. I'm still bullish here from the last 3 weeks. Pull back to my zone. That's my long. That's how I want to execute. Excuse me. And I think that pretty much gives me my bias. So one more time, Ultra. To establish my daily bias, I'm looking for Fibonacci retracement levels above 38% is going to be bullish. Above 62%, it's going to still be technically bullish, not quite as strong or robust. And then if we're below 38%, you're going to be bearish. And then if you're below 62%, then you're going to be looking at being moderately bearish. So on an intraday basis, this is a good example. Well, let's go ahead and WTI crude oil futures. Pretty good. Big time move. Bang, bang. There's the retracement. You can see right here. Still technically bearish. That means that this move is still in order. We didn't take out 62%. We're still technically bearish. Now, on an intraday basis, which is probably what everybody wants to know, 30-minute chart, bread and butter, especially for futures, bearish. Why? Okay, right there, 9 a.m. Eastern, 7 a.m. my time. Okay, that's going to be sort of your traditional NYMEX open for WTI crude. That's when the volume starts entering the market. Right there is opening bell, ding, ding. So this U.S. range, this U.S. session range, I would be working right from that high, spike high there, spike low there. You had a little bit of a pullback, failed at 50%. You failed at 38%. We're bearish. So my intraday bias for the last 45 minutes or 48 minutes of WTI trading is going to be to the downside. I am bearish this market. Why? Because price action is beneath the 38%. We're sort of flirting with that lower Bollinger Band, which suggests that we're trending. And also my 13-period EMA is also spread apart pretty good from my Bollinger midpoint. Those 3 indicators tell me it's trending. Or you could just look over at the tote board and say, we're off 3%. Something to think about there. Yeah, I hope that works. All right, one more question, 2 more questions, and I'm going to go ahead and sign off here for today. My throat is kicking like Jackie Chan. All right, Addy SA. I've watched a few of your videos, Shane. I've incorporated the 920 and CCI into my strategy. That's fantastic, Addy. How's it going? Be sure to keep me posted. Send me a private message over at How to Trade, or you can just post some of your results in the YouTube threads if you'd like. All of it's all good. It's definitely all good. All right, Ultra Trader, you're welcome. Let me see. One more question. Hey, Mew. Hi, Shane. Any specific difference with the 8, 13, 20 and the 920 EMA? Well, the 8, 13, 20 is going to be a 3-moving average. It's going to be a triple moving average crossover, which is going to be fine and dandy. You're just going to be using that 20. That 20 EMA is going to be sort of your long-term trend follower. So the crossover strategy itself isn't necessarily unique. The only thing about the 8, 13, and 20 is it's going to have an extra step in there. You're going to have to gauge price with respect to the 20 as opposed to just watching for crossovers. So you're going to be looking at the 8, 13, 20. The 8's got to cross the 13, and price has got to be clear of all three moving averages. There's nothing wrong with it. We do the same thing with the 5, 8, 13. A lot of people love that strategy. I do too. I think it's great. But the 9, 20 is designed just to be really easy. And we've coded it all up, so it's relatively simple. So definitely something to think about there. All right, one more question here. Addy, Shane, is there a major difference between the HLC3 and OHLC4? I'm using HLC3. Boy, I don't know if I follow you. The OHLC4, I imagine you're talking about sort of your settings for your EMAs. Yeah. My own personal EMA, I do on 2. I go on the midpoint of the price bars. And I'm an old football player. I played American football, and when we were tackling, when you would tackle, you were always taught not to look at their head or their feet. You want to look at the guy you're tackling's belt. You want to look at their belt so they can't shake you. And I think price bars are the same way. I don't really care necessarily where the highs and the lows are with regards to my moving average. I want to know what the mid is. So I base my moving averages on the mid. Now, for this 920 EMA, we've got the 9 and the 20 just based on the close. The reason why we do that is because we want it simple. The close is the factory setting. We kept the 920 on the close. There's nothing wrong with that. If, in fact, you're interested in trading based on the 3 and the 4, that means you're going to be trading the quarters or the thirds of the price bars. So you'd be here, and you'd be looking at something like this, and instead of that, you'd be looking, okay, the third. I don't know that I would be doing that. I just don't know anything about it, and there's a couple of rules on my streams. The first rule is if it makes money, it's the right answer, and the second rule is if I don't know, I'm not going to sit here and pretend like I know. I don't really know much about the 30% and the 25% averages using the moving averages on the price bars. I just don't know much about it. My own personal price bar, my 13-period EMA, which is one I swear by, is going to be a product of the HL2. It's going to be the midpoint, not quarters or thirds. I hope that helps, Addy. That's all personal preference. So if you're having success with it, your way. 2 rules on these streams. Makes money, it's the right answer. And if I don't know, I'm not going to sit here and BS you. I really don't know. I really don't know what to say to that. I think that if it's working for you, then go with it. I love the mid. That's my favorite, and that's what I do is the mid. All right, guys, I'm going to go and sign off for a while. My voice is toast. It's done. We're going to be back tomorrow with another live stream. This next one's going to be more of a, not really a workshop. We're going to do some high-impact scalping and swing trade ideas. I'm going to go through my own personal playbook and levels. We're probably going to look at maybe some 5, 8, 13 trades and 9, 20 trades, and we're going to see exactly what's on tap, maybe for some swing trade opportunities going into next week. That's about it for today. So I want to thank everybody for showing up and participating and checking out the workshop. The Wednesday workshops, we'll see if there's a demand for these types of things. We'll go through all of our strategies, and I'll start doing workshops on Wednesdays. If, in fact, you want raw market reads, be sure to check out our analytics thread inside the How to Trade trading room. We've got a brand new trade idea that I put out earlier today. It's a pretty good one. We've been hitting most of these trades this year. Not too many have gotten away from us, so that's always a good thing. All right, everybody, have a fantastic trading session. Watch the news feed. If you don't do anything else, watch the news. Trump is saying something seemingly every other hour. Last night said that he was going to roll back some of the tariff expectations and wasn't going to fire Powell. That sent the markets higher early, but now all that optimism's fading. I'm still net bearish. I'm not getting fooled by these spikes, but be ready for anything. The volatility is immense. You're absolutely welcome, Lita. Thanks for stopping by. Okay, everybody, have a great trading session. If you need anything, drop by How to Trade, send me a private message, and I'll be sure to get back to you. Until next time, trade the action well, and we'll talk soon. See ya.